This is Mike Montpetit with Town and Country Realty and Greg Donohue with Truist Mortgage. I invited Greg into the office today so we could just kind of talk back and forth a little bit about what's going on with interest rates, the new reassessment for the taxes, and national and local trends. Which one do you feel like talking about first, Greg?
Well, rates are always the hot topic. Why don't we start there?
Sure. Yeah, what are the interest rates right now?
So right now we're sitting somewhere in mid sixes for a 30-year fixed loan, which is your common loan.
Mm-hmm.
And just kind of backtrack a little bit. In October, we saw them peak right below 8%. So when the headlines or rates are coming down, they've come down. And so it's like, all right, now we're in mid sixes. Where are they going to go from here? And I think you got a decent range of where they could go. So they could stay in this range. They could go up a little bit, but really I think what the expectation is that they come down a little bit. And what everyone really wants to see is a rate starting with a 5.
Yeah, I heard something about every 1% in interest rate is 10% in buying power, in either direction. Don't know the actual math behind that, but we certainly saw the faucet turn on and off with the fluctuation of interest rates over the last few years, and prices are a direct reflection of interest rates.
Absolutely.
So let's say you pull out your crystal ball and you know more than the Fed. I don't even think they know what's going on. And interest rates go down below 6, which some people are predicting below and some people are predicting still above throughout the year. How will that affect your business?
If rates are below 6, it's going to be hectic, very busy. Yeah. I think people will be coming in droves to get pre-approved and to move forward. And all those people that closed in the 7s, they're going to be refinancing. So lenders will be, I expect, to be busier this year.
Okay. I was with some of my mastermind people locally, and apparently in the Triangle, the real estate agents are down 38% from where they were in selling homes in 2022. So 2023 was down. There's just not as many transactions. That's locally. From a national perspective, I also heard that in 1993, we had a certain supply of homes for sale inventory. We are now back to that level. It's always been higher than that, and now we're at one of the lowest levels of inventory, and still a lot of people looking for homes. So it's kind of a supply and demand thing.
And it's the ultimate problem right there, because it goes to the other problem, which is affordability.
Yeah.
And so as the supply remains constrained as it is, and I mean, that's not going to change anytime soon. People are just struggling to be able to afford the home that they're trying to get because there's that many more people pushing to get the same property.
But the overall economy, we've got an election coming up here. What happens historically to interest rates in an election year?
It's tough to say, because I think it really depends upon what the markets are expecting from the candidates.
Yeah.
In 2016, there was a lot of fear about who was going to win the election, and you saw rates move upward because of that fear.
Mm-hmm.
So what's going to happen this year? I think it's tough to say. I just watched a forecast earlier today. The range of rates was literally mid-5s to high 6s. Usually you don't get a range that wide, and I think it's everyone hedging. Probably because the last 2 years with these same forecasts, they've been so far off. You know what I mean?
We're better historians than we are fortune tellers.
Exactly.
And I think if you ask a lot of people when it comes close to election time, are you better off in the last 4 years, or were you better off in the previous 4 years? Regardless of your political affiliation, there will be a pretty decent percentage of people who are going to throw their election vote, based on if they will think they'll be better off under one administration or the other.
100%.
People are coming here, the second fastest city in the United States.
So is real estate a good investment? I mean, locally, yeah.
Mm-hmm.
The best you can do, really. I mean, it's just it's a low risk move. Is there risk? Yes. But is it a stable, long-term play? 100%.
So we handle mostly the selection of the property and matching the lifestyle to the people. And you handle the financing of it, because I think only 25, maybe 30% of homes are owned free and clear. I don't see anybody in foreclosure. Have you seen any foreclosures lately?
And no, thankfully, that's not something that we've seen a lot. I mean, with rates being low for so long, the mortgages that are being held in servicing are much lower than where they're at today.
How do you at Truist help people achieve their dreams when they want to um, execute the plan of something we show them?
So we have a really nice product. We have the Truist Grant, where so it's tied to a conventional loan, which is your most common mortgage. So the most common mortgage there is the conventional loan. It's income based though. So your income has to be 80% or less of the area median income. And if it is, we give you this grant. It's 3% of the price up to $7,500.
Ooh.
Can go toward closing costs or down payment, which most of the time when you get money from the lender or the seller, it goes toward the closing costs only. This one can go toward the down payment. It's a really helpful thing to have. And the income limits in Wake County, Johnson County, Franklin County, 93.6. You're talking about nice income.
That's what the average income now is, 93,000.
93,600. And with this product, if you have a $90,000 base and a $90,000 bonus, we qualify you on just the base.
Oh wow!
You qualify for the grant. It's really nice. It's not for first-time home buyers only. It's literally conventional loan, buying a primary home. If your income's there, we can give you the grant.
Does this require any homework for the buyer to do, or they just apply?
Well, so they do have a little homework. They have to take the course, but the course nowadays, it's an online thing you do from your home. It's free, and that's literally it. You do that, we give you a form that states, hey, this is a grant. You have to sign that, and that's the requirement. It's the easiest thing. And honestly, every time I do it now, I'm like, okay, this is too easy. But it really is. It's an awesome product.
When I was brought up, my parents made me put 20% down on everything. But now, like, what's the average down payment for people?
It varies. You've got first-time home buyers spending $800,000 on homes, and you've got first-time home buyers spending, $300,000. So it really does vary. But conventional loan, you can do 3% down.
At one point, you had a doctor loan too. Is there still something like that where they can put a very low down payment because they have all this student debt, but they are pretty much guaranteed to?
We have, so the physician loan that one offers 100% financing up to $1.5 million.
1.5, yeah. I helped some people at 750 at the time. That's probably like 6-7 years ago.
And
now it's 1.5 million.
Well, think about what's happened. So 7 years ago, the conventional loan limit, so pre-jumbo, was 417. Now 766, 550. It's almost doubled in like 7 years, maybe less than 7, because jumbo loans are historically harder to qualify for.
Oh, so the rate differential isn't that much for a jumbo loan now, or?
Honestly, so for the longest time, the jumbo rate, at least at Truist, would usually be lower, harder to qualify for, so really less risk because you're a more qualified borrower.
Yeah.
But last year, with all the banking turmoil, like the SVP bank.
Oh, yeah, they didn't have enough reserves to back up.
That impacted portfolio loans more so than it impacted, say, conventional and FHA and VA loans. So the portfolio type products like the physician loans, that was really hurt across the industry because those are loans that are held on our bank portfolio. But as the Fed starts loosening up, they're supposed to start dropping the Fed funds rate this year.
Okay.
I think as that happens, you're going to see the portfolio product suite, which is jumbo loans, the doctor loan, those rates should come down.
And what a lot of people don't realize is that when the Fed raises or lowers the interest rate, which is one of their main levers, and they're supposed to be objective to do what's best for the economy, it's not always a one-to-one correlation with the mortgage rates. There's that, is it a loose correlation?
It's like, loose correlation is a good way to say it. It doesn't work the way you expect it to. It's almost like the opposite, And then there's like an immediate impact and then an extended impact. And the markets are making predictions on when they're going to make their cut. So my rates today have I think just in general, the market, maybe 60-something% think that they're going to cut rates in March.
Okay.
And then it goes higher with the next meeting. And then I think they're thinking 100% chance they're going to cut by June.
I've heard that, yes.
So today we factor that into our pricing.
Oh, good.
Tomorrow we'll do, and then as the information changes, the expectations change. You throw it into your little spreadsheet and it tells you what price to give. It's weird. In October, like I said, when the rates peaked, it was crickets.
Oh, yeah. Yeah,
And
that was
then
not fun.
the last 45 days have been
Bananas.
extremely busy. Like, it's crazy. I always talk about this mythical even flow where you just constantly have the same amount of business.
Never.
Never. But right now it's like crazy. And the incentives that builders are offering, it makes it such a big deal because it helps with that affordability problem.
Yeah, we've seen some recent ones. We're working in a couple of new construction neighborhoods for our investors, and they are offering closing costs and sometimes throwing in washer, dryer, refrigerator, or blinds, or whatever we can get for them. So they might pay a little higher rate because they're investors initially, but they're not buying it just for cash flow. They're buying it for appreciation, which we've observed in the triangle, 4 to 5% historically for a long time.
Yeah.
And then what did we have in the last 3 years? Like 40%, 40, 50%. It was.
And it brings us to the good segue, by the way. What are we talking about next? The tax valuation.
Oh, yeah, yes. The word on the street is that the taxes went up 50% of what it was before. So let's say you had a $400,000 house, for example, that went up to $600,000, 50% higher. And people are asking, can I appeal it? So we'll put a link in here on how to appeal your tax assessment if you feel like you're being charged too much. I looked at my own and I said, they're pretty close. In fact, they're probably still a little bit low based on my experience.
Oh, you know what? I looked at mine and I was like, it's fair.
It's fair. Yeah, it's actually, they're getting closer.
Now, not thrilled about it because we were going to get a discount basically before. Ultimately,
it was,
yeah.
Well, I also heard that they're by June, that Wake County, I can't speak for the other counties, they have a statute where they will try to keep it revenue neutral. And so let's say your assessed value goes higher. So they will make the rate lower so that you won't pay that much more in taxes. So we've been paying, the last 23 years I've been here, a little less than 1% of the value.
Yeah.
Coming from other states, people are paying 2-3% in taxes to the government.
1% in that range. That's, in my opinion, that's a great tax rate for us.
That's the cost of your fire, police, services.
Look at all of the parks we have.
To pay it. Oh,
you know,
amazing! You've been to that new Cary Park?
We did. We've been there.
Same here. Isn't that beautiful?
It's just amazing. We're loaded with
$65 million
amazing amenities throughout all of Wake County.
All for our free use.
That's it, except for the tax increase. But so it'll be interesting to see in June, which I'm going to be paying special attention. All of us homeowners will, to see what that looks like. Will they actually reduce the tax rate to make it neutral for us? I wonder. I do wonder. And if not, what comes next? Because they just made 50% more revenue off the county homeowners.
Yep. Well, they, ever since I've been here, it was every 8 years they reassessed, but they did a special one just in 2020 in just 4 years because it had gone up so fast. They can do it. It's expensive for the Wake County commissioners and all the tech people to go out and get all 541,000 homes or whatever number there are. But they have to do it every 8 years, and I think they're just trying to do a baseline.
Yeah.
And I'd say I encourage all homeowners to look at it. Look at the Wake County tax if you're here, or even Durham County, and see how they compare.
You just brought up a good point I was just thinking about. So they did, I believe it was historically 8 years, they would reassess. And then in 2016, they passed something that said, because of how fast our area is growing, it's going to be every 4 years. So 2020 was the first one of that. And now here we are the next 4 years. But so what does that mean to somebody buying a home at today's price?
Yeah.
Their tax value should be locked in for 4 years.
Correct.
And you've got appreciation happening, just like we saw from 2016 to 20, from 2020 to now. I mean, my home went went up 50%.
Oh, so you're in that.
We can't say that that's going to happen 4 years from now, but if you have 5% appreciation for 4 years, for the next few years, if somebody buys this year, they're going to have a tax discount for the next few years. Another reason to buy.
Investors were buying a lot of properties in the triangle for a while there. Are we still seeing many institutional investors snag up these properties and push out the first-time home buyers?
I think I don't know when that happened, but it's like it's become a clear core business strategy for businesses to do that. It's yeah, absolutely.
Because it's tangible. They can see things
It's
go up.
consistent.
Yeah.
It is absolutely. Which I mean, it makes sense, but it completely does hurt the buyer,
Right.
the first time home buyer, the move up buyer. It hurts all of them because it takes away, and they have more spending power.
I know the bankers probably have an association, but realtors also have an association where we're doing some things. I know there's a big grant in Raleigh right now to do some subsidized housing in the city and give people a jump start with affordable housing, which is tough. It seems like the only affordable housing I know is if you get a tiny house for some people. But who can live in 300 square feet?
Those things are pretty incredible, to be honest with you. That's funny. Yeah, well, I think from the bank side, you've seen, so Truist has the grant. I think that's becoming more of a thing where lenders are just trying to help people get over the hump so they can get in.
Yeah.
And
ride the wave, if you can.
So buy as soon as you can. You have to figure out a way to make it as affordable as you possibly can. With student loans where they are, it's a challenge.
Yep. And then how about for sellers? Like I know a lot of people they love their mortgage rate, but they don't love the house, because people have different phases. Life happens, with families growing, shrinking. What do you see as the trend of the average age? Well, maybe age. Are people getting into first-time home buyers? They can be older now, like because they have to
Yeah,
be earning enough money to get something.
I mean, I would say 20s to 30s. You see it older than that. And I have some customers closing right now that are in their 50s for their first time buying a home. And it's exciting to see that. But that's, I would say, more of an outlier.
Okay.
20s, 30s. And then as they get into that, let's say mid 30s, that's when you're looking at they're buying basically the move up house as their first home. The conversation I have with people, I think people get stuck on the fact that they got a 2.5 mortgage. Yeah. They have a home that they bought, let's say, for $500,000 4 years ago. Yeah. Well, now that home's worth how much? Way more.
A lot more.
And they owe $300,000. Yeah. So if the rate's 6.5 and they were at 2.5, but they're putting $600,000 down because they're transferring their equity. Mm-hmm. It's the difference in payment is not as extreme as you think it is. So you have to do the math. You have to do the numbers based on where's it going to be when it all shakes out. If you're just rolling the equity from one home to the other, then what's my payment going to be? And I think as people do that more and more, they're going to find that like their wants and their needs outweigh that 2.5% rate.
Right. How many of your people that come in and get mortgages are more concerned about the payment?
I mean,
and they'll do an adjustable rate. I mean, is that I've seen people doing adjustable rates and wait until the rates come down, then they'll refinance later, or is it even worth it doing that?
So, adjustables have been oddly priced higher than the 30-year fixed for a while.
Oh my gosh!
So there's an inverted yield curve right now between the 10-year and the 2-year treasuries. Okay. So what that means is that the 10-year is lower than the 2-year, and the long-term mortgages are based on that. And the short term are based on a 2-year. So until it stops being inverted, the 30-year fix will likely be the cheapest route. But what I have been seeing, and this has been kind of like the hot thing of the last maybe year and a half or so, is temporary buydowns. Oh. So you get a 30-year fixed loan, but for the first year, the rate's 2% lower than what the actual end rate is. Then the second year, it's 1% lower. Okay. So that's a way to allow them to kind of like step into their mortgage. Yeah. But the whole idea behind that is that rates are supposed to drop sometime down the road. So it helps keep their mortgage payment lower for the first year or two while waiting for rates to drop.
Yeah, you don't live with the price, you live with the payment. Fortune teller prediction for the future. What do you think 2025 will hold for us?
Next year we'll see, this is me just completely winging it here, but I think we'll see rates come down more than this year, because I think what last year we hoped they'd do a certain thing. This year we hope they do a certain thing. But as I was mentioning, this range of maybe mid 5s to high 6s, I think toward the end of the year we'll see it come to the lower side of that. Yeah. and then I think that it'll push into next year.
If I were thinking about moving in the next couple of years or giving advice to somebody, I would say start getting your house ready to sell now. Start depersonalizing, decluttering, just in case everything gets crazy, because you're going to be cashing out for some big bucks, and then you'll need those big bucks to buy the next one. So just ride the wave and keep moving.
That's right. That's all I can do.
Always a pleasure talking to you, Greg. Thanks for
too.
coming over today and
Thanks for
stopping
having
by.
me.
Absolutely. Talk to you soon.
All right, man.
Okay. Bye.